Hello and welcome to episode 1 of Smaulgld Subscribers Sound Off. Today we have with us Smaulgld subscriber Derek Bronson. Mr. Bronson is a financial analyst. And how long have you been a Smaulgld subscriber, Derek? Do you remember?
Lewis, it's been about a couple months at least. I would say 4 if I had to take a guess off the cuff.
Well, I appreciate you having you on the show today and also having you as a subscriber. Can you just give us a quick background on your work as a financial analyst, Derek?
Absolutely, and thank you very much for having me on. So I have a bachelor's of science in finance and a master's of science in finance, and I've worked in the private equity industry for about 10 years, doing financial modeling and data analytics on various companies. So that's my background. Very, very in-depth technical finance.
And you've been interested in finance. A lot of people became interested in not just finance, but also economics during the financial crisis. I understand you were graduating at the time of the financial crisis. Was it difficult to get a job at that point?
Yeah, it was quite an experience. You know, I was sitting in class and just watching the S&P and the Dow just crumble. I no matter where I applied, no matter where I interviewed, I was up against a very large pool of candidates for a slimmed down number of positions. I interviewed for Johnson and Johnson once, and they had just cut 7% of their workforce globally the day before I was interviewing for them. So as you can imagine, it wasn't a very promising outcome.
Right. Now, you and I had talked in the pre-interview about what you perceive as a ton of fires when you went through kind of the laundry list of all the risks in the market right now. When you were graduating back then, were you aware of what was happening? Did you pay much attention to, at the time the U.S. did have a debt issue. It's just not as exacerbated as now. Would you say that your points of view have changed significantly or about remained the same since 2008?
Well, back then, you know, I definitely recognized we were over-leveraged both, you know, at the individual level and at the sovereign level, and in between. But I felt as though there was still room, like, you know, really soon we're going to have to start cutting back on all this, deficit spending and start to really get back to reality. And then as time went on, more and more, you know, I watched and it never happened. And it just seemed like the decisions got crazier and crazier. So, you know, like the Federal Reserve buying $4+ trillion in unsterilized bond, purchases is never a way out of a crisis. So there, in my opinion, there's no such thing as a free lunch. So that's kind of what really tipped me off as, you know, you can't solve it just by buying a bunch of bonds with money you pressed a button and created. So
and yet, Derek, yeah. Were you surprised at the market reaction when QE was first announced?
Oh yes, absolutely. It kind of seemed like everyone's like, okay, we're going to be good now. This is great. And you know, the stock prices went up. So I was flabbergasted that people weren't pulling their hair out.
Well, there were people pulling their hair out, and most of them were in the alternative financial community and people that were also became interested in gold and silver at the time. But where do you see it now that we've been almost a full decade on from the financial crisis and we still have what you would call a ton of fires? Could you kind of go through how you see now these ton of fires and how they might impact the general stock market, the economy, and the gold and silver markets?
Absolutely, yes. So with all this geopolitical turmoil, there are many, many problems, both domestic and abroad. You know, look at Venezuela. It's just nuts right now. People are eating street animals, and members of the military now, I hear, are defecting and marching with the people. So it's just a dire straits there. And, you know, Italian banks, they're not looking great. There's something called a Texas ratio in banking, and it's the ratio of as much liquid cash a bank has divided by the total amount of their bad debts. And most Italian banks right now have Texas ratios of over 100%, and a lot of the big ones even have approaching 200%. And Monte De Paschi was just bailed out, and it's not looking good. Just to summarize, it's just a bunch of plates being juggled in the air right now.
Okay, and since these plates have been juggled, and they appear to have been they're being juggled for close to a decade, as we mentioned, how come the markets continue to soar higher? And you would think gold and silver would catch a bid here. They did for the first couple of years of QE, but since then, since 2011, they've been smashed down. And do you ever see a shift in sentiment, or just forget sentiment, markets where the stock markets, the equity markets, the bond markets will reverse, and gold and silver will take their rightful place on the higher level?
Absolutely, absolutely. So I really do believe that the markets, well, with all of these bond purchases, the money has to go somewhere. So everyone was worried about hyperinflation and is worried about hyperinflation, and I would argue we have seen it already. It's just all in the financial system in stocks and bonds, and the reason it's there and the market isn't perceiving risk appropriately, in my opinion, is just extremely dishonest financial media, political media, pretty much all media across the board. And you look at these hacks of Macron or Macaroon or whatever his name was over in
the new
France.
French president, right?
Exactly. Yeah. Over in France, I think some hackers dumped some of his financial holdings and showing that he had offshore, bank accounts, and he's only 39, and he's obviously, in my opinion, probably a puppet for the Rothschilds or something. But anyway, the French government actually told the French media to not report to the French citizens who were about to vote about these hacks and the information that was provided from the hacks. And in my opinion, we see that the media is basically doing a bunch of censorship on YouTube. I would equate it to a mass, Bill Holter said this, and I really agree with him. He equates it to a mass digital book burning. Mm-hmm. And that leads me to, I really want to give you a shout out and tell people that it would really help out if they, help you out on Patreon like I do. I'm happy to, throw you a few dollars a month, because I think what you and a lot of your other colleagues here in the alternative media are doing are, really helping us expose what I call the club.
Well, thank you very much for that plug, Derek. That's not the purpose of the show. But you raised a very interesting point about the media. Now, we've been hearing and maybe patting ourselves on the back a bit about the power of alternative media and the impact that we're having. However, you raised the Macaroon issue in France, and that was a case where it appears that the media was able to at least have enough control, enough say to kind of shut down whatever narrative that might have come out of that hack. And my question is, are we misleading ourselves in thinking that the mainstream media is losing its power, and that the alternative media is on the ascendancy and able to make changes? Because one of the things we mentioned in the pre-interview was the bashing that gold and silver get from the mainstream media, and an experience you had with a friend of yours when you try, or friends of yours, when you try to explain that you might be interested in gold, and their impressions are, well, maybe you could take it from here, what their impressions are from what they've obviously been getting a dose of the mainstream media about gold and financial issues. So please talk to me about that.
Lewis, yes, it's absolutely an uphill battle. It's anybody's ball game as far as I'm concerned right now, and that's why it's even more important to kind of support the alternative media and really write your senators, write your congressmen, say, hey, why is information being suppressed? They may not even be aware of it. But it's like I said, it's anyone's ball game. We see Home Capital Group in Canada. They're having a lot of trouble. There's essentially a bank run going on. People are taking out their deposits. They had to get a $2 billion cash injection with interest rates going up to, I think, about 20%. And I think they just sold they're already halfway through that, and they sold an additional $1 billion worth of bonds, or of mortgages, excuse me, at an undisclosed terms. And I bet you they took a haircut on those. So I think at some point, just there will be a fire that's just too big to cover up in the media, or several, and you know, I think it'll snowball from there quite quickly, because one of the sayings I really like is, in some decades, nothing happens, and in some weeks, decades happen.
That's a nice one. Well, let me ask you another question. Now, you would have thought, I mean, we've had these big fires, and we had Brexit, we had Trump. These are things that were supposed to absolutely crush the markets, and they didn't. And another question for you is, that was a statement, but Canada, where did you learn about that information about the Canadian bank run?
I'll tell you what really started waking me up was when negative interest rates occurred on roughly 13 trillion worth of debt globally. And I thought to myself, you know, why would anyone ever take on counterparty risk in return for being guaranteed to lose money? And so, you know, I was like, there has to be something fundamentally wrong with our whole financial system. So I started seeking out news sources, because I was looking all over Yahoo Finance, and they're talking about, oh, you know, maybe we should buy more Apple. Right. You know, and I found Zero Hedge, and that was just a breath of fresh air. It felt like, you know, I guess I equate it to waking up, because it was like I had been withheld, the truth had been withheld from me my entire life. And so that's by far and away the best news source I've found in current times to let me know what's going on.
And is that where you found the Canadian story?
That's correct. Yeah.
So the reason I ask is that that's a story that I believe has not made it into the mainstream media. That's the type of story that would impact the average person who doesn't pay much attention. They hear the word bank run, they get a little excited, and they start to worry. And that's probably the reason why you don't see that story in the mainstream media. So it's interesting that you mentioned negative interest rates, and also you can mention cashless societies. These are types of things that they introduce in a way, Derek, that are not threatening, but they're actually perceived as not flaws, but features.
Right. Oh, yeah, it's dangerous. It's dangerous.
So my concern is that if they're able to control this narrative and present basically down is up and up is down, that there's a bigger battle than we might imagine. Earlier in the pre-interview, we talked about, you had a very interesting theory on the future price of precious metals based on supply issues. And you had a very, I would say, counterintuitive, but yet compelling view on what you think might happen. Could you share that with us, please, Derek?
Absolutely. So you look at, you know, GLD, the ETF, and I'm pretty sure that 1 in 300 people would get their gold if they all tried to redeem their shares in the GLD trust all at the same time. So really, GLD is just a proxy for the price of gold in a market where there's no run on gold. And yeah, you look at the COMEX, the Commitment of Traders reports, the all-time open interest high in silver. And basically, I think with all these fires all over the world, you know, people eventually will in the market perceive the risk that is actually already out there. Like I said, I don't know what the catalyst will be, but there will be something that happens, or several fires, and they'll increase their allocations to gold and silver and maybe even Bitcoin. And at that point in time, I do believe that there will be signs of supply issues on the COMEX. And I do believe that what will actually happen is I believe the COMEX will no longer be able to physically deliver. I don't know if it's going to happen to gold first or silver first, but I do believe it'll happen to one first, sooner rather than later, I believe. And it'll happen to both eventually, because it'll cascade from one to the other. And at that point in time, COMEX will no longer be able to deliver physically the metals. And at that point in time, I believe everyone who has who's long gold or silver on the COMEX will liquidate their positions, because what good is a paper position if you can't get the physical metal that backs it in the first place, right? So that would cause the paper price on the COMEX to go way down just by sheer selling. And so, I mean, I bet you concurrently the miners will be skyrocketing.
Right. Can I?
Because, yeah, sorry, go ahead.
Just quick question. I think the scenario you just outlined already exists, and maybe that's why we have the low prices, because currently COMEX can't deliver the outstanding contracts as it is. And
Right.
if that's the case, you've actually struck on something very much, because COMEX is a paper market, as everyone knows. It trades vast amounts more in contracts than they're physically able to deliver, and that's because, as you mentioned, like with GLD, they are there for the paper trading. So you see a time when it gets even more exacerbated, where there's just no ability to claim physical delivery on the COMEX, and that would have the impact of people selling their long positions, basically throwing in the towel, is what you're saying. That, look, why would I even bother trading silver or gold if I can't get the delivery? And then in that scenario, you were mentioning a kind of a tie-in with the Shanghai Gold Exchange. What would happen next?
Well, right, you know, that exactly. Thank you for reminding me. As we all know, the Shanghai Gold Exchange is physically settled. So I think there will come a point where you see the price of gold and silver on the Shanghai, you know, substantially deviate, and I mean substantially, from the prices on the COMEX. And at that point in time, people are going to be filling up airplanes full of gold and silver and just flying it right over to China and dumping it and doing massive arbitrage.
Now, do you think one of the things I've been looking at is the gold ownership in the US and then gold ownership in the East, meaning, let's say, China, India is the two big players. And what I'm seeing lately is two things. When people buy gold in the West, they tend to buy paper, digital assets, ETFs, and the US mint numbers are atrocious. But yet in the East, they load up on the physical product. And do you see a time when that changes in the US for the United States, who seems, you know, for better or for worse, enamored with the digital society? I mean, Bitcoin has taken off in part because of that. Do you see a time when Americans and people in the West decide that they need to own physical? Because in India, they tried to sell those, what were they, those rupee bonds where you're supposed to turn your gold in and they would give you a note, and Indians said, no, thank you. But apparently in the West, they're willing to take a note. They're willing to buy a share of a gold ETF, a silver ETF, and it seems like they've pushed that on us, and it seems to be getting more intense each year, meaning that when people say they're going to buy gold, and if you talk to some of your friends, you tell them about gold, they might consider a gold ETF purchase, but not necessarily going out and buying physical. Do you see that changing?
So I do see it changing. It will be quick and sudden, but by the time people change their minds, you know, they won't be able to get any. So right now, the financial media is pretty much bashing gold, and everyone talks it down, and we've had it so good in the US for so long, and the dollar, you know, has been the king dollar for so long. We haven't really had to worry about anything, because, you know, we're the global reserve currency and the petrodollar. But, you know, at some point in the next few years, I believe people will go to bed and then wake up one morning and really wish they had protected their wealth better and you know, gotten physical gold and silver, or maybe even physical cash and Bitcoin. But there will be a point in time domestically where gold will not bid on the dollar.
And when do you think that, I mean, we've all are kind of astonished that this has gone on as long as it has. When do you think that, when, I'm not asking, well, you can make a prediction if you like, but when do you think that day might come?
Yeah, you know, I'm always hesitant to put a pin on the calendar, but I see this summer being very volatile. I think if you look at all the fires globally, excuse me, I was referring to, they're kind of getting more and more plentiful, and zero hedge is just having headline after headline that are insanely juicy. You look at this ransomware that's hacking all these institutions globally, demanding they pay Bitcoin or never see their files again. And these are, Chinese universities and hospitals in the UK and some banks even. So I guess I would call it the quickening. So I would have trouble seeing us getting past the end of 2017 without some very important systemic events occurring.
Now, we've had Greece issues, debt issues. We now have the Puerto Rican issue. When will the central banks not be able to extend more credit and kind of paper things over? Because that seems to be their MO. When there's an issue, they just issue more credit. And unlike a corporation or an individual who basically can get tapped out on credit, when do these governments get tapped out on credit?
Right.
And it's not a rhetorical question.
I really like
it's an actual
how
question.
Jim Rickards. Yes. No. Yeah. Absolutely. And I really like how Jim Rickards explains it. He says that someday the Fed will cross an invisible confidence boundary, where how many QEs does it take? 5, 6, 7. At some point, it will get too high, and at some point, we look at the cost to go and buy a sandwich at lunch. It's much higher than it used to be. I do believe if printing is continually used to backstop any sort of turmoil, it's going to be so expensive for people who don't have jobs just to live. The wealth gap between the top and the bottom is going to grow so large that there will be a significant uptick in civil unrest at some point. So I think that will naturally work its way if nothing else happens in the meantime.
Okay, I have 2 questions on that. So then you're in your Venezuela situation. But in Venezuela, nothing has really changed as a result of even the breakdown in civil disorder. I mean, what Venezuela had to do was they had to sell some of their gold because the Venezuelan currency was useless. But my question is, have they normalized things
no.
Well, let me answer the question. Have they normalized things like negative interest rates, QE, to the point where that's what people expect when there's a financial crisis? It's just more of the same, and rather than losing confidence, it's actually a confidence booster when the Bank of England lowers interest rates or the United States does another round of QE.
That's a good point, Lewis. It blows my mind when I talk to some people, and they're not worried at all about that kind of stuff. But the average American isn't paying attention to this at all.
And they've normalized this type of behavior, which would just seem absolutely out of bounds to have negative interest rates and money printing like this.
It's absolutely shameful, and we have the NFL and the NBA here. Everyone's eyes is glued to sports. We're a very sports-obsessed nation, and I equate that to the Colosseum back in Roman times. There are so many parallels between us and Rome right now. It's absurd. When Rome was smelting copper into their silver currency, basically you're perverting the currency, and the currency, in my opinion, is the lifeblood of an economy. If you mess with that, it'll have perverse consequences eventually down the road.
Now, you mentioned Rome, and that almost seems like an inexorable drive towards the bottom rather than any type of reset, because Rome never had a reset. Rome went through its crisis, as you mentioned. They clipped their coins. They went from the denarius, went from 99% silver down to about 1% or no percent silver, and the economy and the society just collapsed. There wasn't a point where they had a moment of recognition that what they were doing was wrong, because they were, like you would probably admit, kicking the can down the road.
Right.
And so is that going to happen? Are we just going to continue to kick the can down the road till either we run out of road or there's a dead end?
Sorry to interrupt you there. Yeah. So I would equate that to the differences in technology between then and now. We have insane ability to farm, to get food out of the ground. We have factories that are being automated by AI, and soon, maybe someday all factories will not need any workers, and so Rome really collapsed, I think, because it just got too big for its britches. It couldn't operate all of the territory they had gained. So today, I mean, it's just a completely different world. So who knows how it's going to play out, but it definitely may not, quote unquote, crumble in the same exact way.
Well, unfortunately, the way Rome declined, there wasn't really an opportunity to fix it because it was just heading, as I mentioned, inevitably towards the end. And I think that if that's where it's headed, this might go on for a period of time. And as you say, the standard of living gets worse and worse. You have these fires and fires. But my final question then is, do we want some type of event that will make people realize that we need to put in a new system? Or do we just want them to kind of slow the decline? And which of the two do you think is going to happen?
I think it'll be an event at this point because the financial system is a complex system, and when you grow the complex system, the risk doesn't increase in a linear function; it's an exponential curve, and kind of like a bow and arrow. When you bend that string back really hard, it's going to shoot out the opposite direction really hard. Markets are pretty much the only thing that can correct themselves. So we can't just say, oh, we'll do this thing with this financial instrument and it'll fix the market. So really the markets are the only ones capable of correcting themselves. And it's kind of like Newton's second law, when you push in one direction, equal and opposite, So I think we've rigged it so hard in one way that I think the blowback is going to be really, really hard the other way. So I don't think at this point it'll be a slow grind.
And you think that market force will overwhelm any type of intervention?
Any type, that's correct.
Okay. Well, that's hopeful because we have seen them take over these markets in a tremendous way to the point where the Dow is sky high. And do you think that the Dow and the S&P valuations reflect the reality of the economy?
Not at all. Not even close.
And they reflect intervention.
Right. I wouldn't touch those with a 10-foot pole right now.
And yet, if you haven't been touching them with a 10-foot pole for the last 3 or 4 years, you've lost that on gains, and here we are with gold and silver thinking we're smart. And when does that day come where being smart and prudent and understanding what's going on pay off?
Well, Lewis, all I have to say to that is I can be early to the dance, but still be able to see the encore.
Excellent, excellent, excellent. Derek, thank you very much for joining me today.
Thank you for having me.
Insightful points that you've made. Appreciate you coming on.
Thank you for having me.